Hey guys, what's up? It's Aman from SMC Wolf FX, and today I'm going to spill the beans on my daily Forex routine, the one that gets me all set up and ready for a successful day of trading. I'm a day trader, so we'll be talking about how to get yourself sorted for some killer intraday setups. And just so you know, my style of trading is smart money concepts, otherwise known as SMC. Now, there's a gazillion ways to approach technical and fundamental analysis in SMC, but in this video, I'm going to keep it simple and focus on a few key concepts. So let's dive in. Before I start with all the charting analysis and trading for the day, there's one thing that I just can't miss out on, and that's getting my brain in gear before I even think about turning on my laptop. I trade the London and New York sessions, and since I'm based in the UK, I gotta wake up early to get my mental game on point. So after a good night's sleep, my morning routine normally consists of hitting the gym, having a hearty breakfast, and doing something like solving a Rubik's Cube or playing online brain games to really get my brain working. It gets me pumped and ready to take on the charts. Now, that's just what works for me, but your pre-trading routine could be totally different. You might prefer taking a cold shower, doing some meditation or yoga, or even screaming into a pillow. Whatever floats your boat and helps you get mentally focused and ready to conquer the trading day. When it comes to, say, working hours, I'm fairly strict when it comes to the time I spend trading and the number of currency pairs on my watch list. I don't want to end up overtrading or getting distracted, so I gotta keep myself in check. Usually I'm most active between Tuesdays to Thursdays because that's when the good quality setups and most of the weekly volume tends to happen. When it comes to the London session, I'm all about trading the 7 AM to 10 AM GMT UK time slot. And for the New York volume, I like to scope out setups between 12 PM to about 3 PM GMT UK time. So those are the hours I generally sit behind the charts. And last but not least, I'm a big fan of focusing on a single trading pair throughout the day. For me, that's usually trading the pound versus the dollar or the euro versus the dollar. Alright, so I'll start charting up before the London trading session kicks off, usually around 7 AM GMT UK time, and the first thing I do is mark out the CBDR range, Asian range, and IPDA market opening. Of course, I only use these markups if they meet my criteria, and by the way, I've actually made a video all about how to use CBDR and IPDA. You can find the link in the description below, and trust me, it can be a game changer. So if you haven't checked it out already, do yourself a favor and give it a watch. Next up, I'll begin to mark out my key levels. I usually do this on my 4-hour, 1-hour and 15-minute charts, and what I mean by marking out key levels is by charting up near-term areas of interest for the day, such as order blocks, fair value gaps, Fibonacci levels and standard deviation levels. These then act as my points of interest, which could be my entry areas or profit objective zones. I also keep in mind the average daily range. Basically, this is just the average number of pips a market moves per day over the previous 5 days. So if the average daily range for the past 5 days is say around 70 pips, then that's roughly what I'll expect the market to move in terms of pips during the current trading day. This helps me set realistic intraday profit goals. For example, I'm not going to be expecting a market to move 200 pips in a single day if it's only been moving about 70 pips on average for the past 5 days. That wouldn't be the reasonable thing to do. And one last thing before we look at a few examples, it's always good to be mindful of the economic calendar for the day to stay ahead of any high volatility news events that could affect intraday trades. Stuff like NFP, FOMC and CPI data releases. To keep track of all of that, I use an economic calendar from FX Street. It's pretty handy because you can apply filters to it, like only showing medium and high impact news releases, so you can customize it according to your needs. Alright, it's time to put all of what I've said into practice, and we're going to be looking at some examples. Also, I'll be keeping the examples nice and simple. I don't want to be swamping you guys with highly analyzed charts. This is just to show you what I typically do on a day-to-day basis. Here is the Euro USD 1 hour chart from last week Tuesday as at 7 AM GMT UK time. my morning analysis that day would have been pretty straightforward. I mean, I wouldn't have added anything else to the chart other than what you already see here. On the 1 hour chart, I marked out two important levels of interim imbalance. At the top, you've got an order block with a fair value gap just below it, and at the bottom of the chart, you'll see the same thing, an order block with a fair value gap just above it. After doing that, all I had to do was set alerts at both of these key areas and wait for them to get triggered. Then I'd jump back onto the charts and look at the 5-minute or 1-minute chart to scope out any potential setups. And as you can see, the alert for the point of interest at the top of the chart would have been triggered during the New York trading session. From there, you could have gone down to the 5-minute or 1 hour chart for lower time frame entry confirmations to the downside. The 1 hour order block at the bottom of the chart could have been your bearish profit objective, which would have been a nice 70 pip move, and considering the average daily movement for the previous 5 days, this would have been a reasonable intraday objective. Here is the GU 1 hour chart from last week Wednesday as at 7 AM UK time. This is how I would start off my analysis for this day, so adding a touch of further smart money concept source compared to the previous example. Above the current price, we've got a bunch of confluence zones. Within the same range on the 1 hour chart, we can mark out the fair value gap, break a block, an order block, all in line with the optimal trade entry zone of the Fibonacci retracement tool. That's a really strong area of interest for me, and I would set an alert if price hits those zones of imbalance. And if we take a look towards the bottom of the current spot price, there's a clear 1 hour order block that lines up with the optimal entry zone of the Fibonacci retracement tool. So that's another area of interest where I would set an alert here as well. By the way, I have made a video on the Fibonacci retracement tool that you might find useful. You can also find the link for that in the description of this video. And so in this example, my alert would have been triggered during the London Open for the point of interest towards the top of the chart. Then I would have simply jumped onto the lower time frame chart for confirmations to go short. The intraday bearish objective would be the 1 hour order block to the downside, which would be a reasonable 80 pip move. This setup doesn't require me to spend a lot of time behind the charts. I only need to pay attention to the alerts which I set, enter the trade and let it run for the day until it reaches my profit objective. For the final example, here is a 15-minute chart for GU on a lovely Tuesday morning, and in this example I've marked up my CBDR range and IPDA open. Again, I'd recommend you watch my previous video about CBDR and the IPDA concept, which is linked below in the description of this video, as this chart markup will then make a lot more sense to you if it's a concept you've not heard of before. Anyways, my daily buys for this day would have been bearish according to this analysis. If we start from top to bottom, we've got a sweep in liquidity of the previous high before price traded to the downside, breaking below the previous low, causing a market structure shift, which then brings us to this current morning price point where we have a 15-minute order block in line with a CBDR standard deviation of 1, which is also in line with the optimal entry zone of the Fibonacci retracement. And our IPDA open was bullish for the day, and taking all of the previous points that I've just mentioned into account, my daily buys would have been bearish and to look for sales during the London Open. And in this example, price entered up into the points of interest area during the London Open, where I would then jump into the lower time frames to look for confirmations to the downside, where I would then target sell side imbalances as the intraday profit objective, and in this case that would have been the 15-minute fair value gap below the previous lows. That's it for today's video. I really hope you found it helpful. If you did, please show your love by smashing that subscribe button, giving this video a thumbs up and leaving a comment down below. And remember, stay disciplined, keep your emotions in check, maintain a trading diary, don't overtrade, manage your risk and never stop learning, and I will see you in the next video.